Cool. So we are live. Welcome back, everyone, to episode 2 of ZenLedger's Crypto Innovator Series. We are excited to bring on Tom Shaughnessy from Delphi Digital as our second guest. Welcome, Tom.
Thanks so much, Dan. Excited to be here.
Yeah, man, excited to have you here. I know we've gone back and forth a few years over a variety of different topics, and know that you've been in the industry for a while. So one of our goals here with the Innovator Series is really to highlight 10 really cool people within crypto that are doing really innovative things, and kind of provide a little bit of background around their story, what they're up to, maybe give some of our audience or customers insights into what's coming up next, and really just trying to switch up the content from pure crypto tax into more of just crypto in its entirety. So excited to kind of dive into a little bit of your background, your history, what you're up to now, and what you're seeing moving forward in crypto.
Yeah, man. Really appreciate you having me on. For those that don't know your story, it's incredible. So I really appreciate you having me on too, and excited that I could host you on our pod a couple months or weeks ago. So if you haven't checked that out, people, give it a look. My story's pretty quick on the short version. I went to school at Rutgers, studied finance. I had a microcap research site there. So I paid for drinks on the weekends and stuff like that, putting out research on early microcap stocks. Got a job on Wall Street covering a hodgepodge of companies, basically a lot of infrastructure, the wireless carriers, fiber, data centers, some of the cloud players, at Oppenheimer under a great boss where I learned a ton from. Eventually found Ethereum. I thought it would be competitive to AWS at the time. Boy, was I wrong, because most of Ethereum's on AWS. Wrote a blockchain white paper there back in 2017 or 2018. It wasn't the thesis I wanted, but it was the thesis I could get out. And a month later left to start basically what I did in college for crypto. So just pumped out research reports at the time on crypto. It was very different back then. There wasn't much DeFi. So it was, Bitcoin and Ethereum and Zcash and Grin and Beam and MakerDAO and plays like that. Started a podcast. Eventually found my partners at Delphi, Kevin, Jan, and Neil and MJ. Basically fell in love after 1 week and we merged. And since then we have a couple thousand research subscribers. We have an incubator focused on Terra. And we have a venture fund where I spend most of my time. We've written 60 checks and we've grown our portfolio pretty aggressively. So I just, love finding the best founders on, 5-person Discord groups or, small collaborator calls. Like Dan, me and you were on Seed Club. I love seeing those small early groups, and that's just my day to day.
Sweet. Well, I appreciate you giving the high level. Definitely tons to dig in, and a lot of really amazing experience. As far as making the transition from Wall Street into crypto full time, I know you said you found Ethereum. What were some of the things that you found within Ethereum? Was it kind of the community? Was it the tech itself? Was it crypto at large, or more of just specifically Ethereum that really kind of caught your attention and got you shifted over from equity, stocks, bonds, et cetera, to crypto full time?
Yeah, it's a good question. My buddy Tanner at the time, who's now Consensus, we used to always try and find, side plays that we were interested in and tech and new things. And we didn't really get too interested from Bitcoin from the get-go. We were pretty blown away by Ethereum from the get-go. Covering AWS, you see basically, everyone thinks of Amazon as an e-commerce company, but most in tech know they're generally a cloud company. They host all of the web's apps, all of the apps on your phone. Everything. They run the internet. And basically, the idea that AWS could host any developer, any app idea anywhere was pretty similar to Ethereum, but with lower hurdles, because you could launch whatever you want on Ethereum, but unlike AWS, you don't have to go on a roadshow to raise money from investors, and you don't have to waste 4 years at Amazon building your street cred or Google or something like that. So the idea ported over really well, where you have this giant petri dish where on AWS you could launch any app, on Ethereum you can too, but it's lower hurdles, there's more buy-in, more incentives, and you can use the community. So it wasn't too much of a jump, to be honest, at the time. But the other thing was it was all theoretical, right? We didn't have DeFi, we didn't have NFTs, we didn't have cross-chain communications or viral other L1s taking off. It was a very different time. This is like 2-3 years before last summer where yield farming kicked off. But it was exciting. I think I quit my job when Bitcoin hit I think it was like 18K or something, and it fell off a cliff. So everyone thought I was dumb, but it was, I guess, worth it.
Yeah, man. No, I always like to hear kind of the stories of people that went, from traditional finance or Wall Street into crypto. I remember when I made the jump full time, I had pretty, decent backlash from friends and family who had similar thoughts. What are you doing? Why would you get rid of this? Crypto's, a fad, or it's tulips, or all the normal FUD that we heard back then. So I always like to kind of see, what element of crypto brought you in and kind of kept you going. I know you mentioned, you started doing research on crypto. When that turned into like a full-time gig, how did that initially morph into meeting the co-founders at Delphi? Was it through your research, or was that through just connections or friends at Consensus, or how did that kind of the origin story start?
Yeah, it's a great question. I was trying my hardest to, run the website, research and create these reports on a weekly or biweekly basis, do the podcast, do the marketing. It was a lot to keep up with. And one of my main issues was breaking into the space. It was, I don't know if it was harder or easier back then. I'd probably say maybe easier because there was less people, but harder because it was a more smaller group. But yeah, I guess that's up for debate. But the two ways I tackled that was I started a podcast because, frankly, who the hell is going to say no to being a guest on a podcast? I turned out to just love hosting and talking with people. We've done, I think, 250 episodes since. I really, really enjoy talking to founders. It's also the way that I learn the best. And I love investing in their stories and their passions. And you can only get that through a call, in my opinion. You really can't get that through a post. And the second thing was I DM'd Anthony Pompliano until he accepted a meeting with me. I brought him on to help with strategy and distribution. And that helped eventually find the Delphi guys. And we met, hit it off, and merged a week later. I think it was on Valentine's Day, actually.
Beautiful.
Yeah, match made in heaven.
Yeah, man, he's a well-connected guy. Diving into the podcast, I know you've kind of kept that going throughout throughout Delphi, and it sounds like plans moving forward with those episodes. Do you have kind of a favorite or most memorable episode of those 250? And then through them, maybe a couple lessons that you've learned throughout hosting that many episodes?
Yeah, it's a great question. When I first started out, there was 2 pages of questions with specific dates and times and bullets, and that was just pointless. Nobody wants to listen to question and answer checkbox. I was at Starbucks on March 31st and I hate it. Nobody wants that. So after, as time went on and I learned more about the space, I got rid of question lists altogether. For some of our longer form episodes, we do it because it's hard to do 2 hours or 3 hours without having pointers. But the thing I've realized is a couple things. Keep it conversational. Let people talk about what they're passionate about, not what you ask them. If you keep it conversational, you could let people go whichever direction they really want to, and that's how you really figure out what they want to talk about. And the last thing is, feel free to engage with them. Not everything the guests say is right. Sometimes it's just stupid. So push back on it. It keeps it interesting, and it keeps it logical, I guess.
Yeah, no, I appreciate that. I think that's one thing that we've been trying to do with this Innovator Series is not really have like a scripted conversation or like a Q&A, but largely just who are you, what are you doing, and what do you find interesting in crypto? And I think those are the non-scripted or non-structured calls can go 2 ways. One, you can have one that just doesn't have any momentum or it doesn't have any direction to it, or you can have one that's just really amazing, really free flowing, and the conversation just continues to lead into cool places. So I think we like that approach as well, just keeping things, having some pointers or bullet points, but keeping things largely free flowing. With the DMs, I think that's an interesting topic that we may dig into a little bit deeper. We always get asked all the time from our customers, how do I find the next project? How do I get into the next thing? Whether it's DeFi, whether it's NFTs, whether it's DAOs, whether it's, how do I get a job in crypto? How do I get started? And I feel like a lot of those really come back to DMs, come back to Discords, come back to community, come back to Telegram, come back to just, putting yourself and your thoughts and your ideas out there and sharing them with other people and kind of jamming on what's cool. Are there any other kind of magical things that have come through your DMs, whether they're, obviously Dealflow, I imagine comes through there, a bunch of other stuff, but when you kind of think back of either getting started in crypto or, what you're up to now, maybe we can kind of riff on a little bit of like the power of just DMing and your cold emails or, the digital version of that.
Yeah, no, it's a great point. I totally agree. I mean, it's funny. I mean, I don't really get much cold emails. Introductions from one VC to me on a project, that happens often, obviously. But it moves off email relatively quickly. It's kind of funny how email is like falling off. Like we all thought 5 years ago we'd have our email address forever, and now like my Telegram and Discord handle are way more important from an identity and I guess security standpoint and everything. So definitely use them a bit more. On the DMs, I mean, we hire a lot of people off of Twitter. I mean, my partner Neil is like the king of this, just hiring people. He'll tear them apart and get to who they are relatively quickly. It's pretty cool to see. So I give him a lot of credit there. I get a lot of deals through Twitter DMs. I mean, I'm always making sure to check my, not the main inbox, but your unread messages from people you don't follow. There's a lot of good alpha there. But yeah, I don't totally remember which projects we sourced through Twitter DMs, but I mean, there's a lot of them. So just the ease of access in crypto and being able to tackle projects is awesome. And I mean, frankly, I'm sure you guys don't look at the data and there's security concerns, but I mean, to be at the helm of all the transactions you guys must process for your clients. I mean, I'm sure they're asking you guys what people are aping into or not aping into on a daily basis.
Yeah, we get a ton of questions, of a wide variety, and I think that's one of the things that prompted this Innovator Series was, we always have a lot of customers that are asking what's next, what's new, what's going on. We have a ton of paid subscription groups that we've partnered with that are either leading deals or things like that they have a long list of investors that are kind of going following kind of those footsteps. So they always want to know, what should I be providing or researching next. So I think it's a cool place for us to be able to give back. And then for us, it's also a place for us to look forward. We always, for us to continue to be the best crypto tax software out there, we need to have a really good understanding of what's coming and then get that coded up and not only code it from a product, but then market it and put together moving forward, and I think
I was actually going to ask on that, Dan. How do you guys keep up with it? I mean, I feel like, there's so many projects launching. I mean, this week, I don't know when this pod goes out, but I mean, it's late August and, everybody's diving into Avalanche plays and using their bridge and, it's 10 new projects to have to keep track of. I mean, how do you guys keep up with that? It's an incredible undertaking, but it drives a lot of lock-in.
Yeah, it's a lot. I mean, one thing that we've been fortunate to have is, and not to toot my own horn, but a degen at the head. So a lot of like what's coming next, comes from a lot of like my trading activity or resources or a lot of deal flow through my fund. So we've been fortunate enough to kind of see what's coming next before a lot of people see that. And then using my own data sets and things like that to test out integration. So whether that's like Matic or Solana or like Binance Smart Chain, of course we need like wide sets of data to be able to test and ensure that transactions are coming in efficiently and effectively, and we're capturing all fees and we're all that's coming in. So a lot of that comes through that. Then a lot of that comes through our investors. We are fortunate enough back in 2017 to have some really great people who led our initial convertible note. So like Ben Davenport at BitGo and BJ Boyapati, and some of these guys, Nick Carter, Matt Walsh, like just people that are like really at the forefront of crypto and had the same types of data sets. So it's like, what do our investors need, and understanding what they need, and then kind of packaging that up to the end consumer. So the way we kind of like look at it is really like building like an F1 race car for me, for our investors, for kind of our crypto whales that are using the platform, and then packaging up that F1 race car into like saleable items, so it's like a Honda race car team where you have an F1 race car and then you're selling millions and millions of Accords and Camrys and things like that. So that's kind of the way that we've been fortunate enough to look at it, is having, people who really genuinely love crypto leading the company, and then having really great investors that are at the forefront. And then you bring in, people like Mark Cuban, who invested in our Series A, who's invested in a ton of NFT platforms. So looking at his data sets and looking at his connections. And so a lot of it's, building, but I think one thing probably you and I both can agree on it is the pace of innovation within crypto is mind blowing. So, I think we'd be lying if there was a way where we could keep up with everything. I think it's understanding what's coming next, having a good gut sense of what's actually going to be important, and then looking at pure data of, our customer sets and seeing, out of X amount of customers, like how many are actually even using MetaMask. Out of that subset, how many are actually using layer ones? Out of that, like, so you can look into the data a little bit, and then, we have the ability for our customers to request new exchanges, new wallets, and things like that. So we're always on the lookout for, adding new exchange support, adding new wallet support, adding new blockchain support, adding new token support. And I think the more that we do, the easier it gets for a customer to just simply integrate, a MetaMask account that could include all of his ETH activity, his Binance Smart Chain activity, then his Coinbase or his FTX or whatever, and hopefully give him his tax forms ready to go. So hopefully that gives a little perspective.
No, it's a lot of perspective. I was going to ask how you did your taxes for your fund when you first got started, because the taxes for your fund when you first got started, I'm sure you wish you had ZenLedger to use.
Yeah, it's been a lot, and I'm definitely not going to let you flip the script and
no, sorry, I had to give one.
No, I see the podcast tendencies coming out in you. No, I'm just kidding. No, I mean, when we started the fund, one thing that was different for us was that we are venture only, so we don't invest in liquid tokens, and I think that's made a big difference in a lot of different things. One, we've had LPs that have really long lockups. I think a lot of that, the comfortability of that came from the sense that they understood venture, they understood equity, and they didn't really understand, liquid crypto plays. Obviously, we've had peaks and troughs of that being a really great move and maybe not the best move. So I think that's one thing that's made it a little bit easier for us, is it's mostly fiat into equity, and there's not really many tokens, token swaps or token exchanges. So our accounting is definitely a little bit easier than a lot of more hedge fund based or crypto focused funds that are, they're investing with ETH or USDC or DAI or something like that, and they're incurring a ton of taxable gains across, moving in and out of portfolios and positions. So for us, it's been a little bit easier, I guess, since it's been mostly in fiat into either convertible notes or seed rounds or Series A rounds, and we've had one Series B, but that's it. So pretty early stage for us and pretty normal from an accounting perspective. We just happen to focus on crypto-based companies.
No, that makes sense. That's interesting.
Yeah, man. But speaking on the VC topic, I think that was a question that I had. Obviously, what followed you at 51%, for people that may not be familiar with what that is, that was Tom's initial research and investing platform. And then, obviously followed the rise of Delphi, and I think was one of the first subscribers and customers to the.
You were, man. Thank you for the support.
Yeah, man. It's I remember tweeting out a couple of years ago. I think you guys were doing a sales push or something like that. And I was just like, this is the biggest no-brainer that you can have if you're any person in crypto, whether you're a fund or an individual, is having access to what you guys put out. But I guess my question through that is, I think obviously that research footprint has established you guys as credible thought leaders and token economic leaders and things like that. But really, when did that switch flip, going from, we're providing really great research into, we could probably put together a decent amount of capital and then start investing in some of the projects that we're looking at or that are coming our way. So how did Delphi Ventures really kind of kick off from this core infrastructure that you guys built?
Yeah, no, it's a great question. One of our core competencies was always the research business. So diving really deep into projects, understanding the token econ, the factors at play. Me and my partners all have Wall Street backgrounds. So, the ability to kind of go deep on token econ and things like that was kind of second nature. And it, it takes a village. My partner MJ is unmatched in his technical due diligence and his ability to kind of DD plays there. And my partner Jan is unmatched in his ability to understand basically the entire spectrum of finance relatively insanely quickly. So having a really solid core team helped us expand the research biz and teach people under us kind of how to do what we do. As we started to expand, the obvious question came up. We started seeing potential angel checks here and there, and we started seeing plays that we wanted to deploy our own money into and things like that. So it was natural to think, why don't we just start our own fund and invest in some of the early plays that we're big on, reuse a lot of the knowledge that we're gaining from diving into a lot of these plays. So last summer, or start of early last summer, we attempted to raise a fund, and as and I give you so much credit for doing it, because you successfully raised a fund very early. It's not it's not easy to raise a fund. So we raised our initial fund with just partner capital, or primarily partner capital, and we were off to the races. We started investing, and now we're up to 50 or 60 plays. We'll invest on any chain. We're not maximalist to anything. I think that's a dying strategy. It's also just emotionally and intellectually just not stimulating whatsoever. It's just boring. So we've invested on plays on Ethereum, Solana, Terra. We have an NFT fund now run on a portfolio company we invested in called Syndicate. So we're doing plays like fractional and nameless and things like that. So we're all over the spectrum, but I think one of the key points for us is large team and the ability to kind of task those people with becoming experts in each play. And we have so many plays now. I am definitely not the expert in all of them. I don't know who can be, but there are plays that I like in our portfolio that I'm big on, and there's plays that my partners or analysts have led that are also pretty powerful. So definitely takes a village, and I think that's a really important point that people forget early in crypto, is their ability to kind of think that they can do it all alone. And I think it's a dying strategy, because first of all, it's just not where the space is moving with DAOs and communities. And two, it's just, on one side, you can't be an expert in every play and chain. And on the other side, the operations work, audit, tax, fund investors, like that work is obviously huge, if not equal to the amount that goes into the front facing stuff. So, the ability to do that is just not, you just can't do it. So having that team too makes a big difference.
Yeah, and speaking of team, like how big's the team right now? If you can share kind of head count or rough numbers.
So we started at 5 when we merged, and now we're over 50. So between all divisions. So yeah, it's growing quite a bit.
And is there plans, in an ideal world, and in a year from now, are you planning to hit 75, 100, or kind of keep it? Like, I think that's always a question that we get from the fund side is, are you building out the team? How big? What are the resources that go into, consistently performing well? And, I think that vastly differs for every single fund and how they set it up and how it's run and who's involved. So I guess it's a question for you guys, or for you specifically. When you look at like headcount numbers or future growth plans, like does that include trying to hit 75 or 100 people, or trying to kind of optimize around that 50 to 60, but make them like continue to grow internally, or how does that look like?
Yeah, it's a good question. We really don't have a target. We find if we come across a super smart person who's passionate in an area that we need help in, we'll hire them. We don't really have plans on the growth. It's also like, there are factors at play, like diminishing, returns on time. Like, you just can't spend, you just can't train 10 people at once. And the econ also has to make sense for them economic wise. And that starts to get fractured if you hire too much without, the numerator growing too much, which is the value of the business, which it is. But you got to keep that in mind. So yeah, no set targets, but a very large focus on hiring the best people we can find. And it kind of feels like every other week we're finding somebody new.
Absolutely. And I know you mentioned, earlier, Neil has kind of like a really cool hiring cadence or way that he goes through when you guys are looking at a hire. And I think this is important in the sense that we have a lot of people, whether they're, individual investors or they're looking to get full-time in crypto, that are always looking for ways to break in, always looking for funds or companies to work for. And I think that's important, but understanding what these companies or funds are looking for themselves helps you understand, am I in that ballpark or things like that. Um, so when you guys are looking at potentially making a hire, what are some of the factors at play? Like, are you looking at, pure resume? Are you looking at DGen scores? Are you looking at, Discord and seeing how many communities they're in? Are you looking at like background checks or reference checks? Like, I think that's always interesting for me, is to look at, there's so much human capital flooding into this space. And a lot of that comes with like really credentialed capital, as far as, I went to XYZ school, I worked at XYZ company. And I think sometimes those are not the best candidates for crypto. It's typically the ones that, and this is not a dig on anyone that's gone that route, but it's typically the ones that may not have gone to a good school. They may not have worked at a great, or at like a prestigious finance company, and they've gone into a different realm of work, whether it's marketing or ops or something like that. And so I think it's always fascinating for us, obviously with like Mirror and things like that, to see. I think Suna is doing a really cool experiment right now with looking at like DGen scores and having people submit proposals via Mirror and looking at kind of that body of work versus just like, here's my resume. So in a long-winded question to you, when you guys are looking at candidates, like what are those criteria that you're looking for when you're hiring?
Yeah, it's really all over the place on where we find them. So, we might be investing in a project and we find somebody who's on their Discord who's just an absolute ace at something related to that project and demonstrates to us their ability to go deep. And using that project as an example, given we're up to speed, it's easy to kind of judge their strengths. So we could find people anywhere, Discord, Twitter, on the street, doesn't matter. As for how we judge them, a lot of it is we don't care where they came from. I don't know if we've ever even really thought through a GPA or a school or anything. We generally just look past it. We really look for how they think. So send me a Medium post, let me read it real quick. Want to see like how you think through problems and issues and economic factors and things like that. We do use DGen scores. I think it was Atomic Blue, and there's tests out there where you could test crypto knowledge. I'm not sure if it's the blocks or somebody else's, which is solid. So yeah, it really is a focus on who they are and where they're going, and less so about their past. I always regret going to college. I mean, I wouldn't be here if I didn't go, but it's even less important in my opinion here. I think it's, for most degrees, a waste of time. Especially in crypto. I mean, unless you're going to become a doctor or you need specialized training or something. I mean, you could learn more in 6 months in crypto than you ever will at 4 years of college. And I don't care which college it is. And it's just the fact. Everyone gets out of college, they go into crypto and they learn so much more in 6 months because it's the real world. It's happening in real time. It's finance, it's game theory, it's psychology, it's deal making. It's smart contracts, it's econ, it's creative, it's fun, it's interpersonal skills, all of the things that college teaches you, but this is applied and it's in real time. And I would recommend anyone in college to give crypto a whirl for a couple of months, because everyone who I've seen who's on the fence doesn't end up going back. I think Ben from Mechanism is a good example of somebody who decided not to go back. I might be botching that, but I'm pretty sure he's a good example too.
Yeah, no, I think there's a lot of examples of people that have made the transition into crypto full time, regardless of where they're coming fresh out of school or from finance or marketing or accounting or wherever they're coming from, that fall in love and really see that. And I think that's one thing that's really interesting to me, is seeing that global talent and the ability to connect across borders within crypto, not only financially but with human capital. That's really cool. I guess last question, kind of around the team makeup. As far as geography, is it all US based as far as like employees, or have you guys hired, from Eastern Europe or Southeast Asia or things like that? Or is, I think one of the amazing things within crypto is the ability to have this like global deal flow and not only of deals, but human capital. So I was just wondering, when you guys have set up the team, where's that geography look like?
Yeah, it's all over. I mean, I'm outside New York. I love the energy here. I think liking where you live is really important, being happy and, really enjoying where you're at. You can't buy that. You got to wake up every day happy, or else everything else is pointless. So liking where you live is a big part of that. It's kind of a tangent to your question, but the team is all over the place. New York, various states, London, Portugal, Asia, all over the place, Ireland. So yeah, definitely global at this point. Probably less in the US on a percentage basis than global at this point.
Nice, nice. Well, sweet, man. I appreciate you kind of diving into Delphi and the venture side of your business. I think one thing that may be interesting to touch into, and it probably touches on the research and the venture side, is, when you look at crypto right now, what are, 2 or 3, there's probably 20 or 30 that we could go, deep into, but what are like 2 or 3 really amazing things that keep you guys up at night or keep you guys interested? Or, obviously with the research and the venture side, I'm sure, if you look at a Venn diagram, there's probably a nice meaty center of that. Is it really on DeFi? Is it really on NFTs? Is it really on layer 1? Is it really on DAOs and communities? And I guess my ask to you is, before we dive into a specific topic or research, maybe we can give the audience like a high level overview of what said thing is, and then get into kind of why that makes you guys, or you personally, really, interested or invested in at the moment.
Yeah, totally, man. I mean, I think when we started out, we were pretty squarely focused on DeFi. We made a lot of bets there, like Thorchain for cross-chain comms. Cross-chain liquidity pools. We did Tokamak, which launched in part, not full. It launched last week or the week before. Confusing timelines a bit, and that's on liquidity direction and things like that. So, a lot of the plays we invested in last year are now coming out. It was definitely a focus on DeFi then, which was great. And it was fun and exciting. It's definitely shifted more, I would say, on, I guess, a little bit more of the creative side, right? Like, we're investing in a lot of NFT infrastructure now through our NFT fund. We're looking at different chains now and to invest on them. We've made L1 bets, but I think we're more attuned to making bets at the app layer. We're also really big and excited in play to earn games. So Axie Infinity is a big one for us. We're invested in Yield Guild. We're invested in Ember Sword. We'll invest in equity, tokens, land, maybe even in-game items eventually at that point. But yeah, we're pretty excited across the map, if that makes sense. I mean, one of the ones that I'm extremely excited about is Fractional. We invested in their rounds, and basically the reason I was so excited about Fractional is we saw a lot of NFTs, like, I mean, think CryptoPunks, and we just saw people buying the tail end of these, right? Like buying the 10,000th one or buying the millionth one, and there was no scarcity, there was no true value there. There was hard to tell a story around it. So the idea was, why not fractionalize the best ones, the zombie punks, the apes, what have you, the Fidenzas of the world, right? And it's really hard to fractionalize things because it gets stuck where it's hard to put the pieces back together, or it requires a lot of communication and gas and ETH fees to kind of come to an agreement on putting it back together. Fractional's genius is that the TLDR is you could fractionalize an NFT, and each buyer of the fraction just sets their pro rata reserve price. So if you buy 10% of a punk and you think it's worth $1 million, you write that down, and it's Dan at 10% thinks it's $1 million. Tom owns 10%, he thinks it's worth $2 million. Average those together with everybody else's, and you get a reserve price. And anybody can say, hey, I want to buy it for that reserve price, and that'll trigger an auction. And an auction will then start to make it even fairer, so people can bid from that starting price, and whoever wins gets the full NFT, and the shard owners can replace their shards with escrowed ETH. Super simple, super straightforward, clear product market fit because it's over 200 million TVL with no native token incentives whatsoever. So yeah, no, Andy is an incredible founder, and I feel like I'm frequently bringing him up because it's a play that I just love, and it's a founder that's just awesome. So that's a piece of NFT infrastructure we're really excited about too. Sorry for the long-winded answer there, but kind of investing all over the place.
No, you're good. And I think that's like one of the reasons why it was, such a great idea to have you come on is, I think you guys have a unique lens into crypto, that touches between, layer ones, it touches, DeFi, it touches NFTs, it touches DAOs, touches DAO infrastructure, touches the tooling between, everything that we're talking about. So I always think it's really interesting to find, the areas within crypto that people really resonate with. So I think that's really where a lot of the alpha comes from, and really the ability to diligence a platform or a project or a team comes from understanding, the issues with that. One thing you mentioned, like the syndicate part, it's like if you didn't understand the DAO tooling and the DAO infrastructure, it's hard to understand why syndicate's really important compared with like, oh, couldn't you just build AngelList on crypto? It's like you could, but here's why that like won't work or is not as effective as building, native technology, native tooling to enable that moving forward. So I think it's, at least for me, it's always cool to see, where people are focusing on. I know you mentioned the NFT fund. Maybe we can dive into that a little bit. Where did that come from? How did that come about? As far as the fund, what does that look like from a fund nature? Is it investing in specific NFT projects, or is there like a specific mandate through that fund where you can, where you have to invest in this way or that way, or is it kind of like a broad NFT fund where we can invest in any NFT we want, or how does that structure process look?
Yeah, totally. The NFT fund's exciting. So we met up with G Money, who's a well-known guy in the NFT space. He's built an incredible brand around purchasing an ape. I think it was 9 or 10 months ago for under 200 grand or something like that. And at the time, it was a lot of money. Obviously, not in hindsight. Good job to him, obviously. So we built a fund around him and his how embedded he is in the space. So the focus is basically on early, pre-seed, seed stage infrastructure deals around NFTs. So I mentioned Fractional, there's Nameless on there. There's Hume. There's a couple of others that'll come out in the coming weeks. We haven't been too active on individual NFTs there, just because it doesn't totally jive with, I guess, the DD process for our fund, which is, quite extensive versus, buying a NFT for a personal account, which is generally easy. It doesn't require as much thought. And you have to move fast to do that. And it's not really conducive to the fund DD process. So yeah, I guess that's the TLDR on the focus there.
Nice. Yeah, I think it's just interesting to see how that's set up. If it was more like a broad pool to invest in NFTs, or more kind of like a venture style bet on the NFT community and, the tooling around that, and then projects and platforms that are coming up around there. Sweet, man. Well, I appreciate you diving into that. Are there a few other things within crypto that you think our listeners should maybe take a look at? Maybe we can step back from like high level. I know we've gotten into the weeds a little bit, but if you were someone who's maybe fresh into crypto and looking to go from listening to these podcasts or listening to a webinar or things like that, or maybe watching YouTube videos and things like that, into actually getting like actionable. One person we work with really closely is DeFi Dad through Fourth Revolution Capital, who's an investor. I think what he's done with like his YouTube tutorial videos are really great, and probably a really great resource for our listeners to look at. But I think we probably both get this question a lot: is friends, family, whatever. How do I get involved in crypto? Where do I start? What do I start doing? So maybe if we could give like a high level roadmap of like, if you were fresh into crypto, maybe have a decent understanding, but like, what are some action items that you would take to really start exploring what we're talking about? I'm sure there's people listening that like, they've heard of an NFT, but they don't know like, how do I get an NFT? What do I do with this NFT? Why is it valuable? Or on DeFi, or obviously, C Club you mentioned is a really great platform for trying to push forward social tokens and community tokens and DAOs. But for the average person, how do you get involved with the DAO? So long-winded approach of saying, if you were looking to give someone kind of like a 5 or 10 step, and you don't have to go into each step, but like, what are the main things that you would recommend people to do? Obviously not financial advice or legal advice, but is it opening up a account with FTX? Is it opening up a MetaMask account? Is it aping into some small projects? Like, what do those things look like?
Yeah, no, it's a really great question. And I'm glad you brought up the disclosure. Full disclosure, some of the projects I mentioned, we obviously invested in, as I mentioned. But my advice is relatively simple. The dollar value has changed in my advice because of ETH's gas fees. But I used to tell people to take $100 and try this stuff. Now they need like $500 given the gas fees. But my advice is buy $500 worth of Ethereum. Obviously not financial advice, strictly educational here. And do 2 things with it. The first one is, 3 things. First one is get a MetaMask wallet. So, go on Google Chrome, get a crypto wallet in your browser, make sure you back up the seed phrase in 3 spots. Call your mom, tell her the phrase, call your dad, sister, whatever you want. Lock it in a safety deposit box. Send the ETH from Coinbase to the MetaMask, and then you can get started. So go to DeFiPulse.com, try the top 10 projects listed there. Try every single one, even if you don't know what they are. Use Curve, use Maker, trade on Uniswap, SushiSwap, Yearn, open a vault or use a vault, whatever you want to do there. And then the second thing, go on OpenSea and view all the NFTs, or go on Rarible or Super Rare or another provider and give them all a try. See the difference between a 1 of 1 and a 1 of 10,000, or go in fractional and see 1 of a million. So I don't think you should read anything. I think you should literally just dive in and get started. And if you have only an hour or 2 hours, there won't be a better return on your time.
Yeah, no, I think that's great advice. I think that's something that I slowly had to get into probably back in like 16 or 17 is having obviously that first initial crypto wave of ETH going crazy and Bitcoin, touching 20K. You had like tons of people that were like, how do I get involved? How do I get started? And I think at that time I was definitely more like educational and things like that, where it's like, look at these couple podcasts, look at these like research platforms, read these couple books. Obviously I think all of those are still valuable, but I think getting like skin in the game and having actual money at play helps you, one, you'll definitely focus way more and learn a lot more when it's your money versus like watching someone else do it on YouTube. But two, I think it gives you an understanding of how things are. And that's something that we do as far as like onboarding with our employees, whether on the customer service team or things like that. Is like, take a little bit of ETH or take a little bit of USDC and go try and play around with these things. So we have a customer that comes in, they're like, hey, I'm trying to import Binance Smart Chain activity from MetaMask, or I used, I use Changelly or Shapeshift or CoinSwitch or something like that. Like, how do I import that? Like, having an understanding of what that is and how it works and what these things are and how people are using them really helps you understand, crypto in total. So I think that's great advice. Obviously, as we mentioned, not financial or legal or monetary advice, but I think putting small amount of capital at play and just really started testing out these things is really important. Are there any other things that you'd kind of highlight in that approach? Maybe it's phase 2 of this, and we won't go into phase 3 or 4 or 5, but once I get on OpenSea or Rarible, Super Rare, and once I've looked at Uniswap or Maker, Compound or whatever, what else am I doing? Like how do I get involved? Or the platforms I'm using? Do I dive right into Discord? What is Discord? Do I set up a Twitter account? Like how do you start to kind of make a name or brand for yourself in this space?
Yeah, that's a really good question. It's a tough one. I'd say probably 2 things. And they're all active things. So there's a lot of people out there that can, read all the tweets on crypto Twitter, all the meme docs, and they can be geniuses. But I think they're few and far between. I think for the majority of people, they have to actually try this and feel it and be emotionally connected and lose money and figure out why and stuff like that. So my advice is, when you try out all those DeFi projects or the NFT projects on OpenSea, find one that you like that you would use if money wasn't a factor. So if you love gaming, maybe that's Axie, or if you love, painting or drawing, maybe it's a generative NFT project or something like that. And, just get fully involved in their project, go on their Discord, talk to their founders. Everyone's approachable. If they're not, it's a red flag, just leave the project. Try it out, build some art, talk to the founders, see the roadmap, get super involved with it. And the other way to really figure out what you're doing is either to talk to people, like on a podcast or over the phone or something like that, or on Discord, or write about it. So, you tried MakerDAO, well, write about it and tell me how it works, because you're going to run into 35 things you didn't know. And by the time you're done, you'll be much more knowledgeable on it. So just find a great project and dive in is always my advice.
Yeah, no, I love that. I mean, it's definitely one thing. The writing piece is one thing that I still haven't done personally a good job on. I don't have a blog or a newsletter or anything like that. So I think a lot of my writings or sharings happen verbally, whether it's on phone calls or in Discord communities or things like that, where it's a little bit smaller scale. So I think that's definitely a great piece of advice. I think And there's probably countless number of people that have a really big platform within crypto that came essentially, out of nowhere, that came just through diving in deep, writing about it, and then having that platform start, and then, that momentum kind of carry on. So I think that's great advice. I know we're kind of coming up to the kind of tail end of our conversation. Are there any things that we didn't touch on that you think would be important?
I would tell people to be extreme and I guess not extreme. And, the way I would phrase that is extreme in the sense of quit your job and go into crypto today. That's like the extreme thing I would tell people. Every day you're not in crypto, you're a day behind somebody else who is, and the knowledge accumulates. And not extreme in the sense that do not throw your life savings at the project you just found 3 minutes ago. And don't be an idiot when you have something that's worth a ton of money and you think it's going to go higher. It's like extreme in the sense of, make the big move into crypto where you can start to learn and network and get up to speed on projects and build connections, but also don't be extreme on like the allocation sizing side of things, because you'll lose your money to somebody who's been here longer. So yeah, just my advice is get involved, but don't go crazy.
Absolutely. No, I think it's like nuanced advice, but so passionate. I guess the only thing that I'd probably add to that for our listeners is, fortunes are made and lost like every single day. And the way that you make it and potentially the way that you lose it can have a big impact on crypto. And I think that's one thing that we see time and time again, whether it's ICOs, whether it's STOs, whether it's DeFi, whether it's NFTs, whether it's DAOs, like the ability to make life-changing money is here and it's amazing. But I think that shouldn't be your end all, and how you make that money and how you operate when you have that capital is a big difference. I've personally run into a ton of projects and a ton of individuals over the last 6-7 years and being kind of full-time in crypto, where they may have the capital, but it's not someone that I would ever work with ever again. So your reputation in this space is like massive. So doing things the right way, doing things with integrity is super big within crypto. And it's not always just, I have X amount of capital, because capital is abundant, whether you're a fund or an individual. So it's like, when it comes down to who should we let in this project or who should we let in this deal flow, your reputation as a firm or as an individual can make or break you within crypto. So I think, as you mentioned, that allocation sizing into a project is always something to be aware of. But even if you hit a home run and have a 10x or 100x or 1000x, ensuring that money doesn't get to your head, and stay kind of even keel and calm, and do things the right way, I think is probably the only other piece that I would add on, because I think I've seen a lot of people go through the advice that you've gave throughout the episode, and kind of that ego side of the thing really be kind of the downfall. And obviously that's one of the hardest things to look at. But the only other thing that I'd add on, especially if you start diving into crypto pretty heavy and getting into these projects, is you can make a lot of money really quickly. But that's not, that shouldn't be your end all, and how you operate when you have that is kind of like the key if you want to continue that moving forward.
No, I couldn't agree more. I mean, I've definitely seen people who've had that ego blow up. And it's not great, man. I mean, people take their past successes, which might not even be based on a crazy amount of research. It might just be based on one ape or, one great trade. And, they think that, their thought process kind of contains everything that could happen to a project, and it doesn't port over. You got to put in the work every time, and having that ego will kill the connections, which drives all of your alpha to begin with. So I totally agree with you, man. Money's cheap.
Absolutely. I guess the only thing that comes off of that as well is managing your money and managing other people's money is a totally different ball game. And I think that's something that we see every crypto wave, and I'm sure you see as well as, I 10x this or 100x this or 1000x this, I'm going to go start a fund, or I'm going to start a project. And I think you should always chase your dreams and your passions. But I think, understanding that managing other people's capital is a whole different ball game than managing your own, not only from a risk, but diligence, but, accounting and tax and compliance perspective. It's big. And it's not always what you want to do. Sometimes managing your own capital is way more efficient, and can lead to a lot less headaches than dealing with other people's money. So, well, sweet, man. I definitely appreciate you jumping on and spending 50 minutes, an hour with us. Like we said, this is an innovator series that we wanted to put together just to get outside of, taxable events and capital gains and income tax and all the fun stuff that we focus on and our software allows you to do. So we just wanted to kind of highlight really cool people who are doing really cool things, and definitely appreciate you coming on and sharing, a bit about your story, your background, what you guys are up to now. I guess, last question for you. This is kind of a knockoff of Patrick O'Shaughnessy's Invest Like the Best podcast, but he asked a question that's, what's the kindest thing anyone's ever done for you? And I've just been listening to, I had like a flight back a couple of days ago that I listened like 4 or 5 episodes, just like back to back to back. And the answers from that question were really cool to see. So last question for you. And then, tailing end, how can people get in touch with you? How can people get in touch with the firm, and how can people find you?
Yeah, that's a tough one. I'd probably say the kindest thing someone's ever done for me recently, when I quit my job and had no money, my mom gave me a $5,000 loan to start Delphi. Or sorry, not Delphi, but 51% at the time. And she is not somebody who comes for money, and that was not an easy thing for her to do. And I'll be forever grateful to her for that. And she knows that. How could people reach out to us? I mean, right on the site. My DMs are always open on Twitter. So you can reach me anytime there. I'm always open to DMs for any project or anybody looking to break into the space.
Hey man, once again, shout out to all the moms out there, the real MVP.
Hell yes.
Tom, you're MVP as well. Appreciate you coming on, spending some time with us, and hope everyone enjoyed this episode. And we'll be back in a few weeks for episode 3 of ZenLedger's Crypto Innovator Series.
Thanks so much, Dan.